to get this reckoning and the shock to say, I can't get a home loan, at my bank where I hold all of this in. And then, fortunately, we were able to empower him with the knowledge of coming to Sentinel Homes and us approaching Sentinel Homes for his home loan. And we were, greeted with an approval. Tell me a bit about how do you differentiate on those affordability assessments?
So in a retail banking environment, the client will qualify for the investment offering at his or her bank, and they will qualify for the car loan offering.
Yes.
And they will qualify for the fixed deposit. That one is the easiest to qualify for.
Yes, of course.
And then they'll qualify for
Credit,
all sorts of offerings.
overdraft.
But then each one of those offerings has its own rules, and those rules are drafted with reference to the set of incentives that the market and the law gives in respect of each of those products, right? And so yes, as you say, it can be disheartening and disappointing to clients to discover that even though they hold all these other products and they have this good relationship with a bank, they don't qualify for that bank's home loan offering, which I think is instructive, because that is why you need a bond originator, which I generally advise for everyone.
Thank you.
And we were very happy to have that client, because I think, if we can use an example without using the person's name, perhaps shed some light on precisely the circumstances. This person was nominally self-employed because they invoiced as an independent contractor the company, the business or businesses for which they performed services. So the first thing that must be noted there is that it's services.
Right.
It's not the sale or trading of goods. Because if you have, say, if you're operating, say, a little corner cafe somewhere, then I can take your bank statements and I can see cash coming in and cash coming out, purchases of stock and sales of stock, but from that I can't surmise whether you're actually selling at a profit. To do that for a business that trades in goods, you need financial statements, because someone has to do a reckoning of, are we actually achieving a profit? But if it's simple service provision by a singular individual to one or a collection of entities, businesses, then even though the document is called a payslip, an invoice, it does precisely the same job as a payslip would have done had they been employees in the formal sense.
The expenses there are minimal, right? Because there's no stock, etc., etc.